Hello and welcome back again to a very hastily put together Breakthrough REI podcast, episode number 129. But we are excited about it, and we're gonna have some good info. And our guest is there, and then he's gone. So we're just getting stuff set up here. We'll be ready to roll in a few minutes, though. But Sandy, how you doing?
Awesome. Fantastic. Excited to be here for another episode. And we'll get him to flop his camera, flip it around, and then we'll be good to go. But excited for another show. We've got a whole bunch of good stuff to talk about with our guests coming up. And as always, want to recommend everyone jump over to our website, breakthroughreipodcast.ca, to go grab all the latest episodes, chime in on some of the discussion on episodes, give us some recommendations on what you're watching or listening to there, and also pick up our free report, The Ultimate Strategy for Building Wealth Through Real Estate, that they can pick up there and then never miss an episode. Once you do that, you'll be on our email list so that you get notified of every show, get notified of events that we're doing, property tours, seminars, webinars, all that sort of stuff. So make sure you go sign up there so you never miss out.
Absolutely. And also go on over to iTunes and leave us a rating and review there. It's very helpful, as you all know. So, take a couple minutes, click on it, tell us what you think. And then there's that just helps us, get out there to more people, and hopefully people that can enjoy the show like you are.
Mm-hmm.
So is he back yet or not back yet?
We got him, but he's a little upside down or sideways. So maybe we got to wait a sec here to just get him to flop around, or we can bring him in and we'll go sideways for a sec and then flop him around while we're talking to him.
Yeah, bring him in. We'll explain what's going on.
Let's bring him in here. Let's bring him in.
Does that look okay?
Well, turn your phone up the other way.
Uh-oh, which way?
You're a little sideways. There you go. There you go. Now we're rocking.
That way? Okay. All right.
It's a good thing sideways video doesn't make audio.
Yeah, sorry, I'm on the job site sitting in my truck. Can you hear me okay?
Perfect.
Sounds pretty good. What do you think? Sounds okay, Sandy?
We're good. On-site job of a real estate investor.
Yeah.
Exactly. Away she goes.
And this guy has, it's an interesting story, I think, because he had, what a lot of our other guests have these, this wasn't a corporate job, but a lot of people have like good careers, which I would say many would consider your career a very good career. And you've decided to let it go and move right into this real estate investing thing and the renovation stuff full time. So we're going to get into that. We're going to talk about that in a little bit. Sandy, do you have anything to promote or talk about before we get going?
We do. Let's cut to a brief little sponsorship video that we've added in here, and then we'll go right back into it with our interview with Jay coming up in a second.
Hey guys, Omar Khan here with Theta Trading Co. I wanted to tell you about episode 124 of the Breakthrough Podcast. We currently have a special offer for Breakthrough Podcast listeners. We're offering a free 1-hour live training session where we show how to instantly add stock options as a new income stream. Now, I've used this myself personally over the years to create a sizable real estate portfolio for myself, and there's no reason you can't as well. Cool thing is it only takes about 30 minutes a day. So if you have a job, or if you have a business, or you're just spending a lot of time with your family, you're going to have time to incorporate this in your life if you take the time to learn this. Okay. Now, we're also offering a 15-minute free consultation to discuss how our option strategy can work with your current investment strategy and really take your investment to the next level. Okay. So for more information, check out 30minutestocktrader.com/breakthrough to join us on our free live training, our next webinar. Remember again, episode 124, where Sandy and I go over exactly how I use this strategy to acquire a large real estate portfolio for myself, and there's no reason why you can't as well. See you there, guys. Talk soon.
Beautiful. Yeah, I missed that interview that day. I think that's the only one I've ever missed. And
in 6-7 years, yeah, it's one of the very few, that's for sure. So go check it out, and you can get more on that with Omar and that data trading. So I think we're ready to get into the nitty gritty here with Jay.
Uh-oh.
So we're getting some feedback, are we?
Awesome.
For sure.
How's that?
Jay,
Is that okay?
was.
Sorry?
Maybe if you can listen out of the phone, that'd be better. Talk to the phone.
Okay.
Let's see if we can do that. The joys of working on site. The joys of out of a studio.
So why don't I can do a little quick intro here before he jumps in, as he gets things set up there. So Jay Wilson's a real estate investor. He also runs Cascading Carpentry, specializing in renovations, legal secondary suites, kitchens and bathrooms, and helping himself and other investors really create increased equity in their properties. And excited to have him here. And I think we're sounding good right now. Are we good, Rob? Sounding good.
Oh yeah, absolutely. We've worked out all the kinks. We're ready to go.
I hope so. Sorry.
No worries. No worries at all. Thanks for being here. Really appreciate you coming on. So, Jay, let's just get started with tell us a little bit about yourself.
Yeah, I mean, I've always been a tradesman. I'm like you said, I was a crane operator, mobile crane operator. I still maintain that license. I've always dabbled in carpentry and building things for myself. I'm a little outdoorsy. I'm into power sports, ATVing, dirt biking, that kind of thing. A little bit of fishing, a little bit of hunting, and a fairly new real estate investor.
Right on. And you live on a farm too, of sorts.
Yes, yeah, I do. I have a little hobby farm as well. We have a horse and a donkey and some chickens and ducks and a lot of cats.
Are the cats part of the farm, or did they just end up there?
Yeah, we got a couple cats out in the barn and a couple in the house as well.
Right on. Okay. And you're married?
Nope. I do have a common law spouse. Sorry, I'm just going to plug in here.
No worries.
Common law spouse. She's an investor as well.
Right on. Okay. So let's just talk about how you got started in real estate investing as well.
Yeah, I mean, it kind of began with my stepdad when I was growing up. He really inspired me to invest in homes. Basically he told me, any homes that he's ever invested in, the value has never gone down, and it really set him on the map. He bought his first home when he was 24. So, I mean, that kind of pushed me to try and get my first home before him. I almost made it. I was 25 when I bought my first house in Bowmanville. I wish I still owned that house. I had a nice little townhouse in Bowmanville. If I still owned it, man, I'd be cash flowing like crazy on that one.
Yeah, I think that's the thing, though. A lot of people who don't have the same mentality as investors. They're like, well, if you're buying another house, you just sell the one you're in. That's just plain and simple how it goes. You don't keep two. Yeah, man, boy, if Sandy, how would you be doing if you kept all the houses you've sold?
I know it's always the case, right? But you're right. That's probably the traditional way of thinking, is to go upgrade and sell the current one. And I mean, a lot of people just generally need that equity, right, to go into the next one. So if everyone kept everything, like everyone who's older in life usually tells you that's a smart move. If everyone listened to that or was able to find a way to do that, I'm sure we'd all be better off. And it's not always a reality that's doable, right? So I mean, you do the best you can with it. Sometimes we're upgrading, sometimes you're selling to actually upgrade into something a better investment maybe, or something that's a little more in line with where you're at currently with your investing goals. So hard to necessarily regret it, because it probably put that money into something better or something different that's helped us get to where we are today, right?
Yeah. I'm going to give everyone a free piece of advice though today, to go along with all the other free advice that we put out on the show, which is, I would say fight to hang on to anything. Like, unless you're flipping as active income and that's your source of income for your family, then I would say, like, hang on to everything for dear life. Don't sell anything unless you absolutely have to. And if there's a way that, I have been in circumstances where partners have needed or wanted to sell off our properties, and I've not necessarily been in position to hang on to them. But I would say there are ways, like someone else can step in and pick up that other side of the joint venture, or there's many creative ways to hang on to it. So and just those are some of my biggest regrets.
Well, I think those are there's sometimes get uncomfortable, right? If you're in a tight situation maybe and you don't want to sell the property, but you kind of feel like you have to for whatever reason, right? There's a million different circumstances, but oftentimes it just takes getting uncomfortable for a little bit and maybe getting tightening up a little bit, maybe just for 6 months, a year, just in order to keep that asset. Sometimes it can be a good play. Because looking back in a couple of years, you're probably going to be pretty excited that you were able to do that.
Mm-hmm.
A lot of people are kind of scared to go through that, and rightfully so. They're nervous. It's uncomfortable to go through a phase where, you're kind of financially maybe a little bit just uncomfortable, right? You feel less secure and that sort of thing. So a lot of times I can think of many occasions, and from my experience, where we've had some months that are tight like that, and you fight through it, and pretty happy that we did in a lot of those cases.
Yeah, exactly.
We'll be back with Jay in a second once he gets his his setup back and going here.
Yeah.
I think he's coming on here.
Something else to say. Oh yeah, while we're waiting for him, I wanted to talk about a Facebook post that I saw the other day, and it got a lot of comments. It was in a thread of investors that we were talking to, or that we're all sort of discussing investments and something like that. And one of them, I'll just stay vague on this, but one of them was talking about was asking the opinion of everyone else in the group what they thought about the bubble that we're in finally bursting. Like, do you think they should wait another like 2-3 months to see what happens here before they buy something? And then when somebody else in the group dug a little bit deeper, it turns out that this guy who's asking the question, should he wait another couple months, has actually been waiting for 8 years since he started learning about how to to invest in real estate, waiting for the bubble to burst. Okay. So, I mean, look what he's missed out on.
I always come back to on that, like maybe it will burst. Who knows, right? You never really know. But even if you were to just buy it and the market did go down a bit, but you were getting your pay down, right? You're getting your cash flow month to month, or at least neutral or positive. Hopefully, you're getting your pay down, right? That's guaranteed. And even if you look at those numbers, if you bought something today and then appreciation didn't go anywhere, there was no appreciation, you get your pay down anyways. You're still, in most cases, what I run numbers on that, you're up over 10+% at least, right? And sometimes a lot more without any appreciation. So you're just missing out on that opportunity. And in the last 8 years, obviously, he's missed out on a lot of appreciation as well, if he's anywhere in Canada.
Yeah, and the other thing is too, like people, and it's important. I'm not going to say that this isn't important. I would say that you definitely need to take, whatever properties meet your criteria, and then pick the best one. I'm not saying you shouldn't do that, but there's a lot of people, a lot of investors that I've talked to that say, I want built-in equity. And of course, everyone wants built-in equity, right? And you'll find that. It might not be on your first deal, but if you keep on investing, you're going to find some home runs, and some are going to be base hits and some are going to be doubles, whatever. But my point is that to say I'm not buying anything until I find a certain amount of built-in equity is the wrong way to look at it. It's, does this property do what you want it to do? Does it get you if cash flow is what you're looking for, does it get you that cash flow? And if the answer is yes, why would you sit around waiting because it doesn't have built-in equity? I mean, if you're like you said, you're covering the mortgage, you're covering the pay down, you're most likely getting some appreciation. And if you're getting cash flow, we've discussed this before, but I would pay more than market for that if I could make it work for me in that way. you know?
Well, it's getting clear on your goals. Everyone's are different. I think some people just take whatever their friend or buddy says about what their goals are and just says, "Oh, that sounds good. Yeah, I'll run with that approach too." They don't really think about their own life and what they really want, right? Sometimes people are always have different goals, and so as long as it accomplishes your goal, what does it matter if it's a great deal according to the market or according to everyone else's perspective, right? It's just about your specific goals, and sometimes you could pay well over market value in some cases to make those goals achievable, right? Sometimes maybe you do need you'd have some pretty unique goals, maybe, but maybe you do need an amazing deal at times. I don't know. But for most people, I think they get a little caught up in that. You're right. And just needing exactly, an incredible deal, a home run deal all the time. And reality is you don't even know what a home run deal is unless you've been hitting singles, doubles, etc. along the way, right? It's too hard to identify if you haven't at least taken action.
We'll get back to Jay here in a minute because he is back with us again now. But the last thing I want to say is like that does burn me up when sometimes like I get pretty passionate when I hear people start to talk that way because okay, I mean, I was going to say not to toot my own horn, but honestly, like we're able to find some really, really great cash flowing properties and we lost him again. There he goes. Good thing we didn't go back to him.
So let's keep running on this. This is a good topic. It's a good topic.
What was I saying? Like we're able to find some really great cash flowing deals for people.
You were tooting your own horn. Yeah.
And when that's the reality, if that is what people are looking for, then like the stuff that we can do that we've been able to figure out in the market that we're in, which is generally Peterborough area. I've heard some of the listeners have said, I listened to like 10 episodes before I even realized what you did and where you were working. But we're in Peterborough and Durham, and the stuff that we're able to identify and change the use in legal, safe way so that these people can make generational wealth for their families and cash flow every month is pretty good. I have to say. So when people start talking about, well, that seems like it may be $5,000 more than market based on the house that sold down the street. It's not what your focus should be on necessarily.
Agreed.
Jay, what happened? Keep losing connection? Is it just dropping off on you or what's going on there?
Yeah, it's really spotty. Sorry, guys.
No worries. Well, you're here now. Let's we were talking about how you got started in real estate investing. You're talking about that house. So let's and where to go from there? Let's talk about that. Might just have to have Jay back another time, maybe. You know what? That's probably what we should do, unless maybe Jay try going outside of your vehicle, maybe just to a different spot somewhere if possible, and we'll see if we can get going from there. Does that sound good? Okay, he's gone.
All right, we're gonna do the radio guys do. Just cut him off. We'll bring him back on next show maybe, and we can dive deeper on his story.
We'll get him somewhere where we can connect properly and not lose him. I think that this is just going to continue like that. Maybe if he comes back in from a different location, we'll see what we can do.
All right.
Sandy, why don't we talk a little bit about what you've been up to lately then?
Jeez, why not? I guess we gotta let's wing it, I guess. So we get a good episode in here and get our listeners something of value here. So yeah, I think we can talk about a lot of things. Let's go down the path of taking action. I think let's stick with that because I think that was a pretty good topic there. And because I look back on stuff, we've been doing. Obviously, early on, as you're getting into this whole world, it is tougher to take action, and everything's a little bit more scary, right? And all that. And I found for us over the last couple of years, we've been doing a lot of action taking, for lack of a better word, and buying a lot of properties. I think there's no way we would have been able to do that without having just, you know, that mindset of taking action and seeing the results come through in the early going, and you know, just being open to not exactly hitting a home run on every deal. And so you know, we've been buying a lot of properties. We've been buying about one every month, sometimes two a month, but 1.5 probably on average per month this year. So I think probably in the last 2 years, we've been around 30 to 35. That'd be right. Yeah, about 30 properties. A lot of not single families, a lot of triplexes and fourplexes. And then we have bought this year 11 units and a 15 unit property. So kind of starting to do some bigger stuff, I guess, is the point. We've done a lot of those triplex, fourplex type conversions or renovation projects in the last, you know, bunch of years, and now just rolling into some bigger things. We are on the cusp of buying. Almost had some exciting news that I would have shared. We were almost buying a 58 unit this year, and we are still looking at this 35 unit right now that we're hoping to put together. So just looking into some bigger stuff, which I kind of am transitioning my thoughts process around all that, in terms of, you know, just being able to acquire chunks of units, and basically you're just buying you know, I kind of look at them as their own little businesses, right? So buying a bigger business, I guess, at a time, instead of always doing the smaller stuff. But I still love doing the smaller stuff. It keeps our people busy, keeps our energy up, and you keep, you know, getting that little rush of excitement when you buy a new property every so often. So yeah, that's kind of where we're at. Looking into some bigger stuff has kind of been our theme this year.
Is it okay? Is it something that you can talk on, maybe to dig into one of those bigger units that you were talking about? What was it, 10?
Sure. We got, well, one of them I think it's a 15 unit that we bought. What was that? Would have been, was it this year? I think it was closed probably in January. And so I think we bought it around this time last year, but it closed early on this year in January. So we've been working on that one for 10 months. And you know, it's a project, like all of our things are, needs some renovations, some turnaround and tenant quality and all that sort of thing. So a lot of our work this year so far has been just cleaning it up and getting it to the point of being able to handle a big renovation. It's kind of coming in phases so far. So, you know, we've done 3-4 units at a time, where either the tenants agree to leave or we talk to them and they get incentivized to leave and move on. So that's been a lot of the process this year, is just talking to tenants and helping them move on to something different or something better in some cases. And then as we turn them over, obviously we're increasing the rents and increasing the numbers to make them a lot better as an investment over time. So we're at the point now where I think we'd have about half of them renovated at this point. So it'll be another 6 to 9 months probably before it's all done and we're going back for a reappraisal.
Okay, so this place is something you found pretty much every unit you'd say needs work.
Oh yeah.
So you got it most likely based on the condition that it was in.
Yeah, we got it for, thinking back now, the numbers have gone up a lot this year, I've noticed, in these multifamilies here. This is a Hamilton project. So at the time we would have been 100 and give or take about 125,000 per unit would have been the price. Now it's really difficult to find something like that for, you know, you're right around 150,000 per unit, depending on the size of the units, what the unit mix is. Are they bachelors, single bedrooms, 2-bedroom, 3-bedroom, etc. This one's mostly ones. It's got a couple 2-bedrooms, and yeah, so it needed to work all around. It's in a pretty decent area though of the city. It's got a lot of potential, and so we bought this one through, did we buy this on the, no, it wasn't on the market. Actually, it was off the market. And a lot of those, as you get higher up in the, into, size and unit size, there tends to be a lot of off market deals happening. Not a lot, but there are some, but there's not a whole bunch, that are making it to the market. I find a lot of this stuff gets, changes hands off market. So we've done a lot, still doing a lot of kind of prospecting in that sense with landlords and looking for deals like that we can acquire or sell to clients. And we like Hamilton for that sense. There's a lot of that type of mix here, right? The bigger buildings. And so, getting in that world a little bit has sort of changed our outlook on some things. Being in the property management world and seeing that for a long time now, just getting the everything in one place, having one boiler or one HVAC system to work with, one roof, all that sort of thing tends to minimize some of your costs long term. And so, obviously having one boiler versus in 15 units, you might have, let's say all duplexes, you're going to have 7 or 8 of them, right? So there's some cost savings, I think, in the management side long term.
So this is something we don't necessarily dig into all that much. So would you say, because I know you're probably going to do a refinance on this at some point. Once everything's done, you're going to refinance it.
Yeah.
So now, those big ticket things, how important are they to your purchase? Because if you're not replacing them, then that's going to be taken in as the value even after you've done all your renovations.
I mean, the big ticket items the big ticket items are I'd rather them be fixed and done already. They're good. They're like, I mean, we're looking at the refinance numbers, right? A lot of that's going to come down to the numbers, right? Which is what, as you get in that commercial lending world, is what a lot of the focus is on. What's the cap rate end up being, or what are they going to evaluate? What cap rate are they going to give it, the lending institution at the end? And how do your numbers affect that potential cap rate, right? So any increase in income, any decrease in expenses is going to have a big impact on that evaluation down the road. So a lot of it comes down to that. How do we increase income? How do we decrease expenses? Having a brand new roof on it doesn't necessarily do any of that, right? Maybe it might help you with utility costs, perhaps, but it might do nothing. So, I mean, there are costs that need to, if it's really rough, it needs to be addressed, right? And it's also not necessarily going to give you a better evaluation.
Yeah, and so it's more about the capital expenditure that is possible later because of those things breaking down.
True. Right? Yeah, exactly.
That'd be more the consideration when it comes to that kind of thing.
Yeah. I'd say right on with that. And
what kind of renos are you doing in them?
So this one, I mean, every unit cosmetically needs to be revamped. So I believe our number is about 20. It's between 20 to, it's about around 20 grand per unit. And a lot of that's cosmetics. There are a couple of things that are beyond just cosmetic, I guess. Like there's a couple walls that are getting removed, smaller walls, things like that to open it up a bit. And other than that, it's mostly cosmetic. So your typical kind of floors, kitchens, bathrooms, walls, trim, doors, kind of typical stuff there. And it's purpose built, right? So it's pretty standard kind of layouts and kind of big square rectangle, I guess, brick building. So you're not going to change too much in terms of the look of the place. Common areas in some cases are being just kind of polished up. They're not necessarily totally revamped. But you got to have nice, clean common areas along with your new clean units to attract good tenants, which is ultimately a big piece of it too, is we want to make sure we're attracting really good tenants. And that becomes a bit challenging at times when you're turning over units in that, because you have, half the building maybe has some different clientele, let's call them different tenant profiles, right? So you're getting a few challenges along with that in attracting the right profiles when you have already a mix of people there, right? So that's one of the things to consider. And sometimes it's better to just wait to tenant them until you're done, or until you're a little closer to being done with the whole building. just to make sure you get the right people, especially during a time like now where the landlord tenant board, and you know how that whole thing is. That's a long drawn out process if you get into a relationship with the wrong tenant.
But so, I mean, I know there's not really going to be much of like, it's going to be hard to answer. So if you were to leave it vacant, how does that work? Because that probably a strain on,
Well, your cash month to month, right? Your holding costs are going to go up because you're going to have no income. But when you look at it at the end of the day, if you're looking for that high refinance number, it's kind of irrelevant, right? You're going to show them what the rents are once you get to that point. What are the actual rents, or you could go off projected, but they want to really see actual rents, right? So what are the rents at that time?
That point, it works into the cost of getting it to that point.
That's it.
In some ways.
Yeah, your holding costs are going to be higher.
Now, there are a couple ways to look at it, right? Like you could, and I've seen a lot of your renos, and usually go all out, like right back to stud sort of thing, and then start and work everything out new. Is that the same kind of strategy in a building like this size, or would you just sort of say, here's the happy medium of money spent versus what I'm going to get in rent? Or is it just like, let's redo the whole thing and make it nice?
This one, yeah, good question actually, because a lot of the ones that we do that are the smaller unit size, or smaller unit amounts, I kind of prefer to go back to the studs in a lot of cases, because then you know what's there long term, right? You know that there's no weird electrical mix going on beyond the walls. A lot of the stuff we do is sometimes they're 100-year-old homes, right? And so having some sense of kind of just clarity that you know behind the wall there's not too much going on there that's fishy, and you've redone it all brand new is nice to know. But with these bigger buildings, sometimes that's not exactly doable, and you need to kind of find that happy medium. I think is what we're doing on this one is not going down to the studs necessarily, making sure all the systems and that are good and running properly, but not going and ripping out the whole building down to the studs, which you hypothetically could do and turn it into something awesome. But you really need to get that price, the purchase price, to be it would have to make a lot of sense, and that's a really, really tough thing to find in our market, and probably any market, I would say, across Canada. In order to find an opportunity like that, it would have to be really, really, really rough and probably almost falling apart or falling over to begin with. Not just have some rougher units cosmetically or that, right? So I have seen a couple of people do that in Hamilton, in our city here. And it's just to finding the right opportunity in the first place, right? That purchase price has got to be something pretty nice looking to make that work.
And then the other side, of course, of the return that you can get doing renovations in buildings like that is energy efficiency, right? So are you addressing that kind of thing as well in the reno?
A little bit. Yeah. You can get grants on that stuff. You can get them to come in and actually address it and look at that. So you can do that in smaller properties too, right? Especially on the heat side of it for gas, you can get your union gas or whatever your gas company is to come in and assess that. That can add sometimes, like even on my own personal house, you'll get that done on adding some free pieces of that might help with the efficiency, because they want to see everything upgraded now, right? So you can go around and look at that stuff. I think on this building, I haven't been involved in that conversation a whole lot, to be honest, but there's not a lot of that. There's not a lot of that available to us in this specific building. There wasn't a whole lot of opportunities to do that. Good question. I don't know the exact answer, but good question.
Like, the other thing that two people can, if they're getting into this kind of thing, is they can look into like those like water saving, like new toilets, right? That do the half flush, new shower heads that
for sure
more efficient.
Yeah,
those kind of things can really affect it. And an overall, like, you can cut the water bill in half, and on a building that size, that's pretty significant, right?
Well, on 1 or 2 units, it's not a big deal, right? But on 15, on 100 units, let's say hypothetically, that's a huge deal, and you could be looking at thousands a month in savings, right? Which, like we talked about, any little decrease in expenses is a substantial difference to your evaluation of what the property is worth, right? And not just in the bank's eyes, but in what a purchaser's eyes might be if you were going to sell it. Because almost all of the value in a building comes down to those numbers at that point, right? Whereas you're looking at the duplex, threeplex, fourplex type model, residential financing, that's not the case necessarily, right? The numbers are important, but there's more at play there, I think. Whereas the numbers really is 95+% of it in this case.
Is there anything more that's standing out with this building that you wanted to talk about? Or
you know what? There's been a lot of, well, we probably can't get into this on this show, but we've done a lot of, there's been a lot of interaction with the landlord tenant board that's been fun and exciting, that we've learned a lot about. And, you know, I guess I'll just say one thing is just, it's really tough. It's really tough to navigate that world right now. Not even like, yeah, it's an interesting time right now because everything is taking longer. Even beyond that, it really is a challenging thing. I feel like, you know, there's all these situations with tenants that are going on, and there's a lot of outcry from landlords right now with the different systems that the LDB has. It is really challenging. There's some challenging components there that make it tough to really do anything. And you know, it comes down to wanting to have nice, affordable units that people can live in. And, you know, that's what everyone wants. And yet it becomes really challenging, right? For that, when you can't even address it because these units are sitting there with challenging situations going on, and you can't get into there to fix them or make them better, right? So people are stuck living in kind of some rougher living situations potentially. And that's what we've learned a lot. I don't want to necessarily go too deep on that because that's a whole conversation in itself.
It's hard to go into specifics with that kind of thing, but I think that is one of the other, along with the question that we usually get on the JVs, like people come to us and say, how do you set up a JV? Like, give us the answer, right? How do you set up a joint venture partnership to buy something? Tell us how to do that. And there's no, like, we've been over this a bunch of times. There's not really any straightforward answer. And I'd say the other one that we sort of get a lot of too is, I don't want to take over this property with the tenants in it. Like, what do I do? Give me the answer. I want it without the tenants. Tell me how to do that. And quite honestly, it's not always possible, right? It's in most cases with apartment building, especially like what you're talking about, there is no way of getting that done for any of the units.
No, it's not going to happen.
Yeah. So you take it the way it is, and the magic bullet is working through the process like you're doing. Unfortunately, it's more of a, I guess, magic quicksand, or I don't know.
At times, definitely, it's not easy. It's not going to take, but that's the thing, right? A lot of the toughest things in life, in business, and in real estate investing, a lot of it comes down to, you know, if you can solve the tough problems, you know, the tougher the problem you're solving, the more financial gain you're probably going to achieve at the end of the day, right? So, you know, if you're always looking for the easy stuff, well, then you're going to get kind of standard results, which can be great because we're in a great industry with real estate. But at the same time, the tougher problems you solve, the more money you're going to make at the end of the day.
And Jay Wilson has made a comment on our stream here. He says that insulation is a big one that you can save some energy costs on as well.
Yeah, windows, insulation around windows, that sort of thing too. You know, better, higher quality doors, even to decrease airflow coming in and loss of heat. Yeah, insulation is a big one. Can be a big one. So cheap upgrade. Oh, he said that it's a cheap upgrade there. Yeah, it is pretty cheap.
Yeah, exactly. Now the other building that you were talking about, was that more of a recent purchase?
I mentioned an 11 unit. Is that the one? Mm-hmm. Yeah, that one closed pretty recently, a couple months ago. That one actually is kind of interesting because it has currently four commercial units that we're converting into residential. So that one's got a little bit of another process in its own there in going through that through that. Buying commercial kind of units in this time is, it's actually an interesting conversation, because maybe this was an idea for someone out there to explore. This specific one triggered kind of an idea in my mind and some others as we were going through it, because we were buying this place before. I think we had this, no, it would have been during the early on phases of COVID here, but we bought that, and the commercial units really would be really tough to get a tenant in right now. Not only now, but I think ongoing, this property really deserves some residential units. I think that's the highest and best use of it, just given the area and everything. So we're converting those. It's not an overly difficult process. You obviously have to get our everything approved by the city and all that. So we're going through that. But it's a really interesting time to actually explore that if you're in a city that has a decent amount of commercial buildings or mixed use buildings. I'm seeing some really decent opportunities in Hamilton right now, where there are buildings that are for sale or that are being marketed for sale on MLS even, that are commercial or mostly commercial. And everybody's scared of them. Everyone's scared to buy them because renting out a commercial unit right now is a bit challenging. Perhaps you could find some opportunities where you can go in and convert those commercial units to residential, which might be its best use anyways, regardless of COVID, but definitely during this time, it might be its best use. And, nobody's looking at those places. So if you're looking to find a great deal, and there's no deals out there because there's no listings right now, it's very tough on inventory pretty much across the country. That might be an idea. I've seen a few. I've seen a few in Hamilton that are totally that, and nobody's looking at them. Nobody wants to buy them. They're very scared about the commercial side of it, and it's not a very difficult conversion. And you can turn that around in not too much longer than a normal conversion would be. And all of a sudden, you get a 2-unit, 3, 4, or 5+ unit building, residential. No issues with renting out. Residential is still very strong in most areas, and finding opportunities when nobody else can find them, I guess, is the point. You need to look and find some solutions to some problems out there, and that's something I've identified. I'm not sure if you've seen that much out your way, but I've seen that here in Hamilton. There's definitely a handful of listings on the market I would look at probably right now that are available for that type of opportunity.
Mm-hmm. And like this process, as well as any other one that you would go through on a building this size, is part of your due diligence, right? So it's not like you're going to get an answer before you go in and put an offer on a place like this. You put the offer in. That this is the process, right? Which a lot of people don't necessarily understand. They want to know all the answers up front. But with buildings like this, you've got a diligence period. You've got things that need to be addressed and worked through and made sure that they're possible before you can actually go firm on something like this. So the process is to get it locked up, figure out then if you can do what you want to do with it. You're not going to call Hamilton and say, hey, can we change these 4 commercial units to a residential? Yeah. Okay, great. That's not how it works.
That'd be really awesome. But no,
a lot involved in it, right? So, and I think that's another thing that people don't necessarily understand is that diligence is done after the offer is tied up, right? Like that way, no one else can come along while you're trying to figure out, can you do this? Meanwhile, they go, I know I can figure this out while I tied it up. And also the process of tying that building up allows you to understand more of what the price is actually going to be, what the terms of the deal are actually going to be, because you don't know that until you put an offer in as well, right? You may be able to get it for less than what it's listed for. You may be able to get vendor financing that that wasn't advertised as part of the deal. So there's all kinds of different things that are going to affect it. And just getting that property tied up, I think, is one of the most important answers that you can give to an investor who might be able to partner with you on it. If you go to them and say, yeah, I'm looking at this place and I'm just trying to figure out what if we can do what we want to do with it. Oh yeah. How much is it? Well, I'm not really sure yet. We haven't negotiated. Like, that's not information that you can go to a joint venture partner with.
Yeah, it's often good to lock something up and get control over it, right? At least have the power in your hands, and depending on the size of everything, right? It's kind of typical commercial or apartment building style. It's of kind of small, medium size. You're gonna get 60 days typically. Maybe a little more, a little less, depending, but a lot of times you'll get 60 days due diligence period, right, where you can find out a lot of these answers and get your architects in, your planners, whoever you need to help on that sort of a conversion to go through and give you their input and see if it works. There's a lot of sometimes, those are the deals that there are a lot of renegotiations through the process just because things pop up, right, that you don't know at the start. And as opposed to your typical residential sale where it's, a lot of times you do the deal, if there's any due diligence period at all, which I'm sure you're finding it out here, there's really no room for that in this market, or minimal room for that.
Minimal.
Yeah. You got to kind of just go through it and kind of, as best you can, foresee what issues might be there and negotiate accordingly, right? These bigger ones definitely still have room for that. And you're right. Yeah, it's a process. You learn a lot through it. There's so many things you can learn through that process. And you got to take advantage of and get the power. And if it comes down to renegotiating later, then that's pretty standard, pretty typical.
And in general, I've seen this a lot, and not with buildings on the scale that you're talking about necessarily, but just different things, where people maybe, and again, like, this will sway somebody to decide to buy something or not, but the squeaky wheel with stuff like that definitely gets the grease. It's not like the answer is going to be straightforward. Can I convert these units to residential? Like, they're going to say probably something along the lines of, yeah, if this and if that, and we can maybe figure it out, and variance here and there, and whatever else they're going to try and say. Like, it's never going to be straightforward, right? So my point was, though, that I have seen a lot of people go into an investment that still works with the intention of getting these things done at a later date. It's not necessarily a question that can be answered right now, but again, if the other, what did you say, there's 7 other units? If you can carry it and you can do well at those 7 other units, then you can address these things later on if you have to.
Yep.
Yeah.
Yep. There's all sorts of different models with it, right? I think that it's gonna be an interesting one. Maybe we'll circle back in 6 months, a year, and share what the process was like, because it's a cool one. I mean, there's good location downtown Hamilton, and it's just got some interesting stuff there with the commercial mixed use there and converting it. So we'll share some more on that story down the road.
Mm-hmm. And that's just 2 of the bunch of properties that you said that you were investing in, but I don't think we can talk about more if you want to talk about more of them, but
we can talk about a couple more. Sure. Why don't we fill in another 5-10 minutes here?
All right.
Well, so like I said, we do a lot of those 3 and 4 unit conversions here, which I find there's just an abundance of them here, and that's what's kind of interesting about this market. I know your market that you're investing in is different, right? You have a lot of the duplex conversions, maybe student rentals, that sort of thing. Because Peterborough, for sure, I know Oshawa and that area might have a few. Peterborough for sure can't have a whole lot of those 3-4 unit properties, where Hamilton just has a bit of a sweet spot for that. It's kind of that. What I like about them is there's enough value that you can drive enough added value in it through renovations to really lift that price up. And there's pros and cons. Maybe we can battle it out of here for 5 minutes, 10 minutes on the pros and cons of a triplex or a fourplex versus a duplex, because both of those are great models.
Well, I'm not going to argue against a triplex and a fourplex either. That's for sure.
Well, I think there's pros to a duplex long term. I think they're very highly sellable, right? And then you get a great tenant profiles typically. You can do the whole live in one and rent out the other type approach, house hack it.
You are going to target homeowners potentially with something.
Yeah, your pool of sellers at the end of the day is really big if you're going to sell it down the road, which at some point probably a lot of people end up selling their properties at some point. versus the triplex, fourplex approach is a little different, I find. Probably you can still get great tenant profiles, especially here in Hamilton, where there's abundance of great young professional type people that are working here now. I just find you can drive the values up quite well. So you can get it to that point where you're going from, a value of about 500,000 now at this point, driving them up to even $1 million and beyond, depending on the size of them, square footage, and the amount of units you put in there. But we've been getting evaluations up to, I think we've even been over or right around, or maybe even just over 1.2 now on a fourplex, which is, 300 grand or sorry, am I right there? Yeah, 300 grand a unit, which is kind of crazy to hear and see for our market. But if you're doing the math, like we haven't, I don't think we've bought one for any more than, probably paid 650 for one, but we got a reappraisal back at 1 point, just under 1.2, 1.175, give or take. So, you're getting all or the majority of all your money back out in that process. And doing a, that was one we just did, actually. We bought 650. It was pretty much the highest we've ever paid, I think, for a renovation project, 4-unit in Hamilton. And yeah, we got a 1.175 refinance number at the end of the day.
And how much money did you have to put into it?
On that one, we would have spent, with holding costs and everything, would be close to 200.
Mm-hmm.
So 850 would probably be the number where we're all in for about 850. So maybe just a hair above that with some holding costs. So, run the numbers on I believe we were all out of that one, or just left a little bit of cash in on it. I mean, if you did, what does that equal? 1,175, 940. So we must have spent a bit more than that. I must be a bit off on those numbers, because we must have spent closer to 250 overall.
You're saying you basically broke even pretty much with like.
We basically broke even.
Putting it free and clear, or not free and clear. Sorry, zero into the project. Zero into the property, essentially.
Yeah.
And that's something that it sounds like, and like you're saying, that is sort of a sweet spot for Hamilton. And it's something that's probably intimidating, or more intimidating, I would say, to somebody new to take on something like that and then have a renovation at like a 250 sort of mark.
Obviously your renovations are higher, right, than a duplex or a single family conversion or that side, because you got four of everything now. But yeah, it's the numbers can work really well as long as the size, like these are bigger houses, right? That's what we have a lot here, is the big 2,500, 3,000 square foot houses. Mm-hmm. And so your units are still 700 square feet, give or take, on average. And you can really do a lot with that amount of size and get some great, 1 or 2 bedroom units with some pretty high quality tenants that are living in a good kind of cool old converted property. And numbers are working really well. Everyone always asks me around that, because the prices have gone up so significantly that, does this model still work here? And I mean, we've proven it over and over again with ourselves and clients, because the rental rates have also been going up a lot, right? And I know that's market to market, depends on the market for how that's looked, but our rental rates have really gone crazy, almost on par with the increase in home prices. So as long as your rental rates are increasing along with that, the home price is increasing, then you're going to have the ability to still turn these units around and create a great return based on like getting all your money out or close to it and cash flowing still.
Mm-hmm. And again, I would encourage people like to hang on to things like you're doing. Obviously, you're not doing that to sell the property. I mean, when you've got zero into it, it doesn't even make sense to sell it. But I can't remember where I was going with that exactly, but it just can't remember where I was going. I'm sorry.
Yeah, this is a fun one. We're stumbling through this one today, but it's been some interesting stuff anyways. I think what we've been talking about. I think funnily enough, on that property, we actually were about 3/4 of the way through and we were debating potentially selling it. Just with our model, this is something I guess a little different for us lately, is we actually are looking to sell one to two a year. If we do like one out of every 5 or 6 that we actually do, we're actually going to look at selling them. Just because we're kind of just having a bit more of a business approach to it now, where we need to, we have a bit of more back end costs with things. And so as that happens and we kind of scale that up a bit, we need a bit of cash infusion every once in a while. So it's kind of going through an interesting process right now in our model, is just having that outlook and deciding which ones we might actually sell, which we've never really thought that way before. And so that's where, selling the odd one might make sense if you're really looking at it as a business. Not like, it's not just investments now for us. It's kind of a business, a lot more of a business approach, and needing some cash flow to cover costs.
Yeah, need that $250,000 to do the project in the first place.
Yeah. So, a lot of our projects, we cash flow, but not crazy amounts that we're able to run a whole business out of it. Because we go for that high refinance number, right? And our goal is to get our money out, recycle it to the next one, and not necessarily have $2,000 of cash flow every month, right? But $500 to $1,000, sure, but even that doesn't necessarily cover a lot of the higher business costs we have, like salaries and things like that.
And I remember what I was going to say now. I was going to talk about the rents being very important on that sale side. But I do find that even with places with lower rents, they are pushing that sale price, right? Like, so the rents and the cap rate don't justify the sale price, but I think that you can more. Do you find that anyways?
Yeah, I mean, people are looking at the opportunity that's there, right? What's the value add? As long as there's value add, we've seen places moving here in Hamilton, which I know is for Toronto area and some other bigger cities. This is probably not unheard of, but 2.5 cap rate. And that used to be not too long ago. We were five, at least 5, more like 6, 7, even in Hamilton, like 5 years ago. So, seeing something change hands at a 2.5, 2.75 cap rate is interesting to see. But it's only doing that because there's value add there, right? So someone's going to go in there and add value to it, and they really don't care what that number is at the start.
Okay. Well, Sandy, it's been a great interview. Is there opportunity?
So happy I could come on the show.
You're welcome anytime. Is there opportunity for people to get involved in this, or is this more like, are you guys partnering on things like this?
Yeah, we're open to any discussion like that. I mean, especially as we get into the bigger stuff, there's a whole bunch of different creative structures to play with, right? And so we've explored, even we haven't gone down this road yet. We've explored, and maybe we will one day, just doing more of the limited partnership model on something bigger. And so, we're not necessarily doing that today. We're not offering a version of that. But maybe one day we will. So if anyone wants to talk a bit more about that or get involved in these, of course, they could reach out and we could explore further on what their goals are and how we could maybe help them out and get them involved. Definitely.
Right on. Okay. Well, this has been your interview with Sandy today. So, hopefully everybody has enjoyed it. And as usual, if someone did want to get in touch with you and talk to you about this, how would they best reach you?
Best probably the email, which I got. If they're watching, I can see it there on the screen, Sandy at Mackay Realty Network.com. They could give us a call too at 289-389-6846, and we'd be happy to get them involved, or at least explore it further and see where the best fit might be.
No, that's great. Well, I'm glad we could do this today.
Absolutely. Thanks for having me on.
So, we'll get back and have Jay on another time, of course. I think that this was quite informative anyways, right? Like something that we don't normally do. You don't actually, Sandy, I'll tell you what, you don't generally open up and tell us much of what's going on over there with you as an investor, I should say.
Well, we got to talk a bit more about it, I suppose, right? And I think funnily enough, we were talking about doing our own shows again soon. So it's interesting that we got the opportunity to kind of wing it a bit, but make it happen here today. And it's always fun sharing. So maybe we'll start adding in our own version with just us a little more here and there.
Yeah,
as we go.
Yeah, absolutely. Okay. Or you know what? We can probably even do some little bits in between. Like they don't have to be hour-long podcasts if we're just doing some updates or the casual conversation between us two, you know.
True.
If we've got a little something to say, you know, shorter ones don't hurt. I think people often don't mind some shorter content. But anyway, if anyone would like to reach me, they can of course reach out to me on email, rob@mrbreakthrough.ca. And thanks, Sandy. We'll see you next time.
Awesome. Thanks, Rob. See ya.
Bye.